Welcome to the Actuary Podcast, where we dive into the world of actuarial science, risk management, and financial insights. Today, we are honored to have Dr. Paul Sweding with us. Dr. Sweding is a renowned actuary and expert in risk management with a wealth of experience from leading roles in the insurance, pension, and risk management. Okay, Dr. Paul, thank you so much for being with me today. I would like to kick off this conversation with a traditional question that I usually ask my guests. How did you come to know about actuarial science?
So a couple of times I've heard about it.
Okay.
The first time was through a maths teacher when I was at school, and I didn't really follow up on it. And he suggested it to me because I was good at maths. Then the second time, I had a summer job at a bank called Kleinwort Benson, whilst I was at university. And I was working in the equities securities research department. And after about 3 weeks there, the head of department came back from his long holiday. And he was clearly very hugely respected for his knowledge around securities. And there were, even then there were rules about no smoking in the office, but he always used to wander around with a big cigar and nobody seemed to mind. Everybody just sort of thought he was marvellous. And he was an actuary. And I thought, I want to do what you do. so that was my initial reason for doing it. So I thought, yeah, if I want to do what he does, then I'll need to join an actuarial consultancy first and find a bit about it and then move into investment banking. But I joined an actuarial consultancy and I thought, actually, I quite enjoy this. I'm not sure I do want to move anywhere else. So I stayed in fairly actuarial roles for the last 30 plus years.
Okay, perfect. Interesting because your profile is quite unique in the industry. You have completed a PhD, you earned a fellowship designation, and you hold CFA. What motivated you to pursue a PhD, fellowship designation, and CFA?
Well, I mean, the fellowship designation is the easy one. I mean, that was what I did first.
Okay.
And when I was working in consultancy and pensions consultancy, it was essential if you wanted to really progress with your career, you needed to be a fellow. Having said that, it's proved much more widely useful. I mean, I think training to be a fellow is really good at helping you think more broadly and more strategically around the questions you face. So it is without a doubt the most useful of the qualifications that I've had. CFA was for a couple of reasons. I mean, by that stage, I've moved into asset management, actually. And I was aware that the actuarial exams at the time had a few gaps on the investment side. It's no longer the case, but the investment subject back in the 1990s was pretty light. So I just wanted to fill in some of the gaps, and the CFA allowed me to do that, particularly on things like the derivatives side, on security analysis, things like that, which just weren't in the exams at all. And the IPO exams have expanded hugely on the investment side now, so they're much more robust. And the PhD, well, that was part of a long plan. I wanted to move to academia.
Okay.
I wanted to do more research, and I figured that to prove that I could do research, it's helpful to get a PhD. I mean, because that's essentially not quite rubber stamping, but it is a validation that you are capable of carrying out independent research. I mean, that's the point of a PhD. So that was really what that was geared towards. And not long after I got my PhD, I did move into academia and became a professor at the University of Kent. So, and I've always really enjoyed research. Anyway, it's, solving problems either for clients or just out of theoretical interest is what I enjoy doing.
You didn't feel tired after you completed your PhD, like you said, that's enough.
Well, I mean, this is the thing. I mean, it took me 6 years to qualify.
Okay.
So I didn't have, I think I had one exemption or half an exemption from my degree, because my first degree was in economics. So I spent 6 years doing the exams, and the first year afterwards, when it got to the Easter holidays, where I'd normally be studying the exams, I just felt that there was a huge void in my life because I didn't have anything to study for anymore. So I wanted to carry on learning and to have something to aim for. So all that really happened after the PhD was I was no longer studying for a PhD. I was actually more studying for papers. I was carrying out research without it having to go towards my dissertation.
Okay, we know that you teach as well as like you do a full-time job. How have you managed to balance your career in the industry and academia?
Um, I mean, the academic side kind of ebbs and flows. So it has at various times been my full-time job where I've done a little bit of consulting as well. And other times it's been a part-time job where I've just done just a few hours of teaching a week for part of the year. Um, it's I think it is easier in the kind of roles I'm in now to balance it. It's much harder if you're working in consulting,
Yeah.
because in consulting you've got chargeable hours targets,
Mhm.
and that that can stop you from doing other things. But
Mhm.
one of the things I've found the more my career has progressed, and it's something which has taken a bit of time to get comfortable with, is people aren't paying me um, to sign in and sign out. They're not paying me to sit at a desk for a designated number of hours each day. They're
Mhm.
paying me because they have particular challenges, particular questions, particular issues.
Yeah.
And I've got 3 decades of experience in these kind of things, and I can draw on it and come up with a good solution pretty quickly. So when you are paid for your experience, you're paid because you can help in with particular knotty problems. It's easier to fit other things around that because you're not just having to, you know, crank the handle, crunch the numbers, and do kind of per hour type work anymore.
Okay, we know that you have been here in the kingdom since 2018. How would you
That's right.
describe your experience working here in Saudi Arabia?
It's been fantastic. It's been great. I mean, the country itself, as you'll be more aware than me, has changed hugely in
Yeah.
that period. It's completely transformed um, in terms of the opportunities for people, in terms of the opportunities for women, especially, it's been fantastic to see, and just the openness of broader opportunities for lifestyle wise as well has been fantastic to see. But when I joined Hasana, it was already a very open, um, inclusive, forward-looking company.
Mm.
So it's been absolutely fantastic working there. The people that I work with, mostly Saudis, many of whom have been educated overseas or very smart, very committed, um, and all joined by the same aim, which is to try to make the returns that we need to secure the pensions of the Saudi population.
What about the lifestyle? How do you see it here in the kingdom?
Well, it's very different to how it was in 2018. I mean, there were no cinemas at all when I came here. If you turned up at a restaurant and it was prayer time, then you'd have to sit
Yeah.
outside and wait until it opened again. So all of these things have changed. So the lifestyle is it's great, and the climate is fantastic as well. Some people really like humidity. I really don't. So I love the dry climate in Riyadh, and in the winter as well. It's beautiful weather. Um, a lot of the lifestyle changes you can see are just still being made. So you've seen all the um, developments being made in relation to Sports Boulevard, for example. I
Mhm.
mean, those kind of developments are going to be absolutely fantastic when they're
Yeah.
finished. It's going to the quality of living for people who enjoy outdoor pursuits, outdoor activities, it's going to be absolutely superb. So, it's still work in progress, but it's come a long way, and you can see the way it's going. It's going to be a great destination.
Okay. We have a huge transformation that is happening across the kingdom. How do you see the transformation that is going on?
Um, and I'm slightly detached from it because I spend almost all my time in Riyadh.
Yeah.
So I see some of the large projects there. I'm aware of many of the other projects going on elsewhere, like NEOM and the Line, and other the Red Sea development. And they look great, and it's clearly part of an overarching objective to diversify the economy away from oil to become a more balanced economy than it has been in the past. And it is absolutely the right approach to try to diversify the economy. And I think a lot of the focus is on the tourism side, which I think we've seen recently has been hugely successful, and it's outstripped many of the initial targets. But I think a lot of the other industrial objectives as well around things like hydrogen production, solar, and the like. I mean, those are going to be fantastic as well.
Perfect. And now let's move to the risk management area. Risk management or enterprise risk management function is not a new concept to fields such as banking, informational technology, telecommunication. Even the defense industry have policies and procedures to mitigate operational risk. You have been in the Saudi market since 2018. Why it has taken the Saudi insurance industry so long to recognize the need to install a risk surveillance system?
Um, I think it's worth thinking about it in a broad context of the evolution of the insurance industry generally. So, something like enterprise risk management. There's various definitions of it and various different views as to what counts as ERM. But you've usually got a central risk function. You've usually got a chief risk officer. You've usually got 3 lines of defense model. So you've got your front line management, your second line risk management, and your third line audit. But until you've got the kind of systems that you need to adequately measure the kind of risks that you're looking at, until you've got the ability to aggregate all of those risks and look at them centrally, you can't really have a central risk function. And I think for many of the insurance companies, as part of the evolution, they've been developing the ways that they do look at risks and improving them, particularly on the operational risk side as well, and starting to integrate those things together. And it's only once that has started that they've been able to really justify having a central risk function. I mean, most of the insurance companies that I'm aware of, I mean, certainly Tawania has a very well developed central risk function, but I think the industry is much further along than it was a few years ago. But it's about the general evolution. I mean, as you know, the Saudi industry still doesn't have a risk-based capital framework yet, unlike say Europe and Solvency II. So again, that's part of the evolution, and I think ERM fits on that spectrum.
Okay, as you mentioned, ERM and risk management. Sometimes we read and hear people use risk management and ERM exchangeable, although we have differences. Can you explain the difference between ERM and risk management?
Sure. I mean, ERM is enterprise risk management, and what that means, it's the risk management of the enterprise as a whole. So it's not just looking at the individual risks, it's looking at how you aggregate them together. So if you look at something like the CERA qualification, Chartered Enterprise Risk Actuary qualification, you'll see that there's a lot in there about things like copulars, correlation measures, homogeneous risk measures, ways of looking at how you aggregate all the different risks into a single number, into a single viewpoint. And that's the key point about ERM, is you're looking at the risk the risk profile for the organization overall, and the systems that you manage risk overall, rather than just individual risks.
Okay, we still find some insurance companies here in the kingdom do have passive risk management functions. What do you see as the primary motivations for elevating the enterprise risk management function in an insurance company?
I think it's that you can see problems before they get serious. So if you're doing ERM properly, then you should have very good links between the first line and the second line. So you should have risk management procedures and escalation procedures that mean that if something happens in the front line, if they can see an increase in risk levels, an increase in, say, claims, an increase in particular type of claims, that gets back to the central risk function as quickly as possible, and it can be fed back into, say, the pricing models. So I think it's the main reason to do it is you can find out about problems before they become serious, and you can take actions to try to mitigate those problems.
Perfect. We know that companies seek to maximize their owner's value. How does the ERM function help protect or enhance shareholder value, minimize operation risk, and ensure solvency?
I mean, the ERM function should be, the central risk function should be working very closely with the people looking at pricing and looking at the use of capital. So ERM can be extremely helpful in looking what the impact on your capital is of taking various different business decisions and looking at them holistically. So if you do ERM properly, you should be able to optimize your risk-adjusted return on capital, and that's really what shareholders should be focusing on. So again, if you think about, and this is particularly in a risk-based capital framework, I think ERM becomes much more important there, because insurance companies have a finite amount of capital, and they need to use it in a way which is going to give them the highest expected profitability, and that means perhaps limiting the amount of business they write in some areas, adjusting premiums in some areas to discourage certain products in favor of other products, to try to make sure they've got the optimal amount of business, the most profitable business for the amount of capital that they've got.
Perfect. You mentioned Taunia has effective risk management function. What about if insurance companies have started to adapt to changes and build their risk management functions? What are the different approaches an organization can take to set up a successful risk function?
First, hire some actuaries. Very important, because they understand risk. I guess there's two broad approaches you can take. I mean, the first is you can outsource it to a company that's done it before. So many of the insurance consultancies will have acted as chief risk officers or helped build the frameworks. Now, there's going to be some regulatory restrictions around what you can outsource, but some of the expertise can come from outside. Otherwise, ideally, you get someone who's done it before somewhere else, or you get someone who really knows the business. I think it's quite important when you're setting up a central risk function, or when you are trying to work in a central risk function. It's helpful to have worked in many different parts of an organization first, so you really understand how the organization works and where the risks kind of arise, and what you need to do to try to mitigate those risks. So that it's taking someone in who just theoretically knows how something works without really understanding how policies are sold, how they're priced, how they're reserved for, how the marketing team works. That there can be a pretty steep learning curve if people don't understand that.
Okay. You have been mentioning the 3 lines of defense framework. Can you explain the framework and how it can benefit insurance companies?
Sure. So the first line of defense is frontline function. So if you're, for example, selling insurance policies, that's first line work. If you're work on the marketing of those policies. That's first line. The second line defence is kind of the ongoing check on that, and that is typically the central risk function. It sometimes expands beyond just risk, so it can also include governance, it can also include compliance, and various combinations of those, usually including risk, will constitute the second line of defence. So that's the ongoing risk management system, which makes sure everything is being done properly. And ideally, you've got good integration between the first and the second line, which means that the second line isn't just sitting in an ivory tower creating rules, but it's actually monitoring what's going on. People are incentivized to talk to it. You can even have people from the second line sitting in those first line functions. So you've got a kind of decentralized central risk function in all of those first line areas. And then the third line of defense is internal audit. So you've got the first line doing the business, the second line doing the ongoing checks, and then you've got internal audit just going over everything, saying, okay, did it work in practice? Were there any errors? So it's not the only model of risk management, but I'd say it's the dominant model of risk management these days, because it does give a very sensible division of responsibilities. And it also, really importantly, if it's done properly, it integrates risk management into the way that business is done, rather than setting risk management up as essentially being a blocker. The people who try to get things past, the people who always say no, that's not ideal. Three lines defense model tries to work against that.
Perfect. You mentioned the importance of having actuaries within the risk management. Here in the kingdom, we still see actuaries are limited to the actuarial function. And lately, we have started to see them within underwriting functions. How does actuary experience make possible transition into risk management?
So I can talk about my own experience. I mean, as I said, when I trained to be a fellow, part of it was learning what I needed for exams, but part of it was learning a way of thinking, a strategic way of thinking about the problems that I was facing. So thinking about the context in which these problems arose. And for me, that's helped me work in broader strategic roles, because I've been able to take that high level approach and spread it across a broader range of areas than those that I just did exams in.
Mm-hmm.
Now, so I think that can help. I think also moving away from the actuarial teams and into underwriting and other teams, the best way that can happen is for individual actuaries to show interest and add value in those areas. I'm a very strong believer that the actuarial profession shouldn't be trying to tell companies you need actuaries in these roles. I've often said that what we really need is an actuary, said no firm ever, unless it had particular reporting requirements. So I think it's something which individual actuaries, if they can see opportunities, then they should seize those opportunities. If you've got, and it works best in firms where there's already actuaries. So if you've got actuaries working in, say, the reserving side of the business already, and they can see the way that underwriting is being done, and they can see how much data there is available. If they can say to the underwriting team, if you let me play around with that data, I could probably improve your pricing model quite a bit, and they do it, that creates a very strong case for actuaries working in those areas. And it's probably about 40, 50 years ago now, but that's how actuaries ended up working in general insurance in the UK anyway. They were working in insurance companies which had life and non-life parts of the business, and the life actuaries kind of looked over the fence, saw what's happening in the non-life part, the P&C part, and thought, I think we could do something here. And now it's a huge global area for actuaries to work in, but it comes from individual actuaries finding these opportunities, showing how they can add value, and then before you know it, it's become a specialist area for actuaries.
Totally agree. We have to be proactive in this part. But once we usually, when we work in different functions, other than actuarial functions, we face some challenges. What challenges do you think actuaries face when transitioning into risk management role? And how can they address these gaps?
So I think that the biggest challenge for actuaries when they're moving to a different area is that they're quite expensive. So it's quite difficult to convince employers or divisional directors or team leaders to employ this expensive resource to do something that they had someone fairly junior doing before. And there's a few ways around that. I mean, if you find something really interesting and you're an actuary, then sometimes you just take a pay cut. I mean, I've done that before. I mean, especially when I went back into academia,
Mhm.
academics aren't very well paid, but I found it interesting, so I went into it.
Mhm.
Um, but the way that you can show that it's worth it is by showing the numbers improve. And that itself is useful. I mean, if you can demonstrate the value that you have added through, say, improvements to the pricing process, if it's more difficult on the risk side because it's quite difficult to demonstrate the bullets that you dodged. It's quite difficult to show, look at these risks that didn't actually happen because we protect ourselves against them. But if they can show in terms of numbers where value has been added, whether it is through superior pricing, so higher profitability, through better use of reserves, that will, because that will be a large multiple of anybody's salary when they do that work.
What about if you have management that focus only on sales?
Um, Start tidying up your CV. I mean, if you've got management which is focused only on sales and not on profitability, not on the quality of business written, then the firm might be around in a few years' time, but it's taking a big risk. Yeah, so you can try to do what you can in that environment. You can try to steer them along a more enlightened path, but um, you know, eh, one thing which is generally a very important question is, does what this firm is doing align with my ethics, align with my beliefs? Yeah. Do I feel comfortable morally working for this firm? Now, I think if you are a Saudi actuary, there's probably enough jobs there that you can make that decision and find somewhere else to work. It's not the case in many countries. But if you're working somewhere and you're kind of thinking, the way they're going around about things, it just doesn't align with my view on how things should be done. You can try and change it. And if you can't, then you can vote with your feet and go somewhere which does align better.
Perfect. How would you describe the risk management function relationship with the other business unit in the insurance company today? And what challenges have been remain?
I mean, I can only speak from my direct experience of Tawania, and I can say that it's very well regarded and very well integrated. So you see risk people on the risk division, the risk team, are in meetings. In most of the meetings, they're not just the risk meetings, so they know is what's going on across the firm. So it is very well integrated there. I can't speak more broadly about the industry, but my understanding is it is becoming increasingly well integrated across the industry in Saudi.
Perfect. Now let's move to the regulator side. We know that regulators play important role in the insurance industry. What role should regulators in the Saudi Arabia play in shaping risk policies, and how they ensure that every insurance company has an effective risk management function?
Well, the first thing I'd say is I think it's great that the insurance authority has been created. As you know, previously it was a department of SAMA, and now it's been spun out to become its own independent regulator. And I think that's really good that there's an organisation whose sole focus is on insurance regulation. And I think what they've been doing, which is a lot of consultation, a lot of quantitative assessments, is absolutely the way to go. So, yeah, this is something which, again, I'm not very close to, but it's really good to see that the insurance authority isn't just imposing rules on the industry without regard for what those rules in the industry without regard for what those rules might mean. It's talking to the industry to find out where they are, what the implications would be, and what that means for any particular changes to the rules. And I think that's absolutely the right way to do it, is to work out exactly what the current state of play is and use that to help define a roadmap to see how to make things better.
Okay. You have worked as a chief risk officer at Hasana. How did your skills and experience as an actuary position you to earn the chief risk officer title?
Well, writing a book on enterprise risk management didn't hurt. So that was a feather in my cap. I think one of the key things that helped was I understood the liabilities. So, as you know, Hasana is the asset manager for GOSI, General Organisation of Social Insurance.
Yeah.
So the reason that Hasana exists is that it manages the assets which back the liabilities of the country's social insurance system. Now, because I'm an actuary, because I started in pensions, but I moved to investment, that means I understand both sides of the coin. I understand the way that the assets work and the risks that are inherent there, but I also understand the liabilities, and I understand how those two interact. And I personally, I think for a role like this, it's very important to have that in your mind, that for an asset manager which is holding those assets against a very defined set of liabilities, you can't manage the assets in isolation. You've got to have some recognition of how they relate back to the liabilities that you're trying to meet.
Okay, you served as a chief risk officer at Hasana. What are the biggest challenges you have faced in managing risk at a major firm like Hasana?
The major challenges for me were expanding from investment risk to operational risk. Now, that's not because operational risk wasn't being managed; it was being managed very well.
Okay.
But it was a challenge for me because I'm much more comfortable with investment risk than I am with operational risk. You know, it's much easier to quantify. You can look at percentiles and distributions, all the rest of it, and I'm kind of in my comfort zone there. Operational risk is a very different animal. It's much more subjective, and it's much more dependent on particular domain knowledge of the different areas of operational risk. So I found that more difficult because it was an area that I was less familiar with. And Hasana now has dedicated operational risk specialists working there who understand this area far better than I ever could. But that was an area that I personally found a bit trickier.
And they have actuaries in the team, or
they have people with actuarial training who I'm trying to nudge towards completing the exams because I think they're very valuable. But I mean, as you know, there's an awful lot of actuarial science graduates coming out of the universities in Saudi. It's really great to see. It's a really highly regarded degree here. It's one where a lot of very high performing school leavers choose to do this, which is great to see. So what that means is that even if you're not looking for an actuary, there's a good chance that you'll have an actuarial science graduate working in a role because they're so good.
Perfect. What advice would you give to other actuaries who aspire to be a CRO other than writing book in risk management?
Buying a book in risk management. I'd always be welcome. The royalty was very nice. I would say try to get as broad an experience as you can. Something which helped me was I hadn't spent my career just working in risk management in an insurance company. I mean, yeah, partly because it wasn't even a role when I started, but I've worked across a broad range of roles, which means that I can look at risk management through a variety of different lenses. And I think that's really helpful because when you're looking at enterprise risk management and you're looking at the aggregation of risks, it's helpful to understand as many of those risks as possible. I've already said, enterprise operational risk isn't my forte, but a lot of the other risks, longevity risk, market risk, interest rate risk, all of those types of things, I do understand pretty well. And that's because I've had a pretty broad experience.
Mhm.
And so going on from that, I'd say if you can try to think long term. I mean, I've known people in their 20s, early 20s,
Mhm.
saying, yeah, I'm not sure if I should do this or not because, what I really want to do is this. It's like, you're in your early 20s. I mean, you've got a lot of time ahead of you. Yeah,
Mhm.
if you do something for a couple of years, you hit 25 and you decide, actually, that wasn't the right route, you've got 2 years of experience, which might become useful somewhere down the line. And at 25, really, you've got a lot of life ahead of you to do other stuff.
Perfect. You mentioned, let's move to the Society of Actuary and IFOA. What is the role of both societies when it comes to the risk management training to the young actuaries?
Well, I mean, both of them. I mean, if you become an actuary, you're a risk management specialist already. Really, I mean, that the actuarial science is basically risk, and the actuarial qualifications are risk qualifications.
Mm.
The only additional point about the enterprise risk management is as I say, it's that enterprise quality, the aggregation
Mm.
aspect to it, um, which both societies sponsor through the Chartered Enterprise Risk Actuary qualification. And it's not just the SOA and the IFOA. A number of societies around the world are also signed up to the CIRA accreditation, which is great because it means there is a global actuarial standard
Mm.
for enterprise risk management. So that the main way they all sponsor ERM is to work the work they've jointly done in creating and maintaining the CIRA accreditation.
Perfect. Let's move to the role of being a board member. We know that you have served as board member in different organizations. A strong board will be made up of members with different background and skills. Have you or how have your actuarial and risk management skills supported you in this role?
Um, that's an interesting question. I mean, it is being um, white, middle-aged, and male. I don't often add diversity to boards, but in Saudi Arabia, clearly I do because my background is working in the UK and Europe and elsewhere. So I do bring a different perspective to many of the board members,
Mm.
to many of the other board members there. So that has been helpful. My exposure to boards outside of Saudi Arabia. Um, on the actuarial side, I try to focus not just on the actuarial problems. There can be a tendency when you're on a board to focus just on the questions which are in your area of expertise.
Yeah.
So, when something comes down to, I don't know, the latest solvency assessment, actuaries on the board, there is prick up like, oh, solvency, good, I know that one. But, if you're on a board, then you're responsible for all of the decisions that are taken, and you need to be taking an equal interest in all those decisions. So it's good to try to make sure that you understand exactly what is going on. And I don't think that being an actuary gives me any special insights there. I'd say one thing which seniority helps with is you just get comfortable asking what might be stupid questions. You get comfortable saying, "Sorry, I don't get that. Can you go through it again?"
Okay.
And that is, I think that's very important, because if you can get comfortable with asking what might be a stupid question, and then you can listen to what other people actually backing up and saying, that's not a stupid question. I was wondering that myself. I think that's where seniority helps. You don't think, oh, nobody else is asking the question, they must understand it, I don't.
Do you focus on the research side of whether the company is over researched or under researched?
Well, I look at that, but I try to. I guess this is an ERM thing. It's
Okay.
not focusing just on that, but just focusing as broadly as you can. So focusing on not just what the reserves are, but what's the pricing strategy, what's the marketing strategy,
Okay.
what's the broader strategy for the areas of business that you're looking at, what's the IT strategy, what's all the different things which a board is responsible for, trying to make sure that you understand what's going on with all of those, and you can ask questions on all those and assess them properly.
Mm-hmm. And how do you describe your experience? Do you describe your experience as a board member in one of the largest insurance company in the region?
It's been great. It's been really interesting, because, as you know, Tawania covers a huge range of different lines of business. It is, as you say, one of the largest insurance companies in the region. So that means that it is a significant player in a number of different markets. It is constantly looking at developing new areas, constantly innovating. And with everything that's going on in the kingdom at the moment as well, in terms of economic development, but also in terms of regulation, it means that there's always something new to look at there. It's not like being on the board of an insurance company in a more mature economy where most of what you're doing is business as usual. It is much more active than that, as we look at how the company is going to proceed with all of this change which is going on around us.
Dr. Paul, thank you so much for being with me today.
My pleasure. Thank you very much.